I just want to unpack something when you say you see big, almost the biggest percentage rallies in bear markets where you can be down as much as 50%. Is that something you think is on the table, a 50% drawdown?
Sure. Yeah, because here's the reason why. You got to remember the U.S. economy is the biggest in the world by far. If you look at U.S. GDP in the first quarter, imports were up 41%. Now, to put that in perspective, you got to go all the way back to the third quarter of 2020 during COVID, when imports were up 88%. But the reason they were up 88% is the prior two quarters, they were down 54% in Q2, and they were down 12% in Q1. The reason imports were up 41% is everybody knew tariffs was coming. People were worried about export controls on things like semiconductors. And so there was this incredible pull forward in demand in the first quarter. If you bought an iPhone, a PC, a car, you name it, in Q1, you're not going to buy it again in the third quarter and the fourth quarter. So you're going to pay that back in the holiday quarters. But what you saw was when companies reported Q1 results, and I actually thought they were going to be good if you go back and read what I was writing. And I thought there would be a rally because of them, because you've had this pull forward in demand. So estimates didn't really go down that much. And so everybody's going, oh my God, things are great. But you can't have a 41% increase in imports and not have to pay that back at some point. And that's probably in the back half of the year.